it's still, in my humble opinion, our humble opinion, a negotiating tool. When he first announced the Canada-Mexico tariffs over that particular weekend, I think back in January, early February, on the following Monday, Asia was down about 5%, or a lot of the stocks in the region. We actually added to our portfolio. So we bought more equity into that episode. The way we frame it is the best investments are made when you're deeply uncomfortable. And, you know, from a position of deep discomfort, it was very, very difficult. It's been difficult, since the start of the year. But in our humble opinion, they're great opportunities to add risk to portfolios.
Mm-hmm. But, here's the problem. We were discussing this with our previous guests. So David Kuo of The Smart Investor was saying there's only so many times that a boy can cry wolf. And, for example, if you come in really, really hard, and I know, as you say, this is the art of the deal, you come in really, really hard, you slap tariffs on, you say we're going to get you hard, and then, like, literally within 48 hours, you do as Lutnick is suggesting, and you offer a reprieve, a compromise, or some kind of softener. Doesn't that undermine your credibility for future threats?
I would actually argue that it's worked. Okay. So he has actually got Canada and Mexico to the table very, very quickly. And again, blanket tariffs are basically back off the table potentially within 24 hours. So I would actually argue it's worked.
What was your key takeaway from his speech? There's so much, right? Yeah. I know. There's one thing that stood out, and that would be important for Asia.
I think the context for Asia is that one of the challenges Asia has faced, particularly since September last year, has been the strength in the dollar. And to be fair, that's a challenge for the US as well. If you look at the dollar on a real TWI, trade-weighted valuation basis, it's up near where it was in the Plaza Accord. So it's almost as overvalued as it was then. And that's a problem for America, and it's a challenge for the rest of the world as well. So I wouldn't be surprised if we do get a Mar-a-Lago Accord, which ends up weakening the dollar or depreciating the dollar. I think another factor as well is that dollar strength has actually contributed to a slowdown. I think the other factor as well, which is really important for investors, is a lot of the bad stuff has happened up front, the tariffs and the trade conflict. Mm-hmm. That's been the challenging part for risk. The positive elements of his agenda, tax cuts, deregulation, reform, drill baby drill, will happen over time. And that's in the second half of the year. So Scott Bessent, the Treasury Secretary, referred to in 6 to 12 months' time, it will become Trump's economy. Mm. But the initial part, especially if it leads to a significant reduction in the fiscal impulse from a deficit of -6 or -6.7 to -3, that would be a significant reduction in growth or impact on growth. And so that's happening up front.